Is this the bottom in silver? These silver stocks I'm buying. Bob Coleman shared this chart from CME Group with over 5 million ounces of silver leaving the registered category at COMEX. Doesn't mean it's left any vaults or anything. It's just changed category. But we are seeing scarcity now in the silver market. So let's just cut to a clip from Money Metals and their supply and demand report.
Something has happened which has not occurred since 2009. The silver basis, our measure of abundance of the metal to the market, has gone way under the gold basis. This means silver is less abundant to the market than gold. Here's the picture. The blue line is the ratio of the gold basis to the silver basis, and red is the ratio of the gold co-basis, scarcity, to the silver co-basis. This condition has not occurred in recent years because the trend has been a rising gold-silver ratio. That is, silver has been generally falling as measured in gold terms. The reason is that there has been no lack of sellers coming to market. Selling physical metal pushes down the bid on the spot price. Co-basis equals spot, bid, minus future, ask. In other words, selling physical metal tends to push down the co-basis and push up the basis, which means that silver, relative to gold, has generally had a higher basis, and when it was lower, it did not go much below gold and did not stay there for very long. Is this the moment we've been waiting for? It's premature to say how durable this is, if silver metal will come to market from private hoards when the price blips up, or if this is the moment everyone has been waiting for, the final capitulation in the silver price and the start of a multi-year run-up in its price. We emphasize that it's premature to make this call. We want to see how the basis reacts to the next price blip, which seems likely to come here. Does the basis shoot back up to normal? Or does the co-basis stubbornly remain low and the metal continue to be scarcer than gold, even as its price moves higher relative to gold? Let's look at a picture of the silver basis by itself. This is the continuous basis, but the September contract is in backwardation, which we strictly define as co-basis being greater than zero, when it's profitable to de-carry metal, i.e. sell metal and simultaneously buy a futures contract. Backwardation should never occur in a monetary metal. For comparison, here's the gold chart. Note the rising basis, even while the dollar is rising. The basis goes from 1.5% on April 18th to 2.2% on July 5th. This occurred when the price of the dollar rose from 15.68 milligrams of gold to 17.59 milligrams. That is, the price of gold fell from $1,983 to $1,768, or 10.8%. Gold became more abundant to the market as its price fell. This is not what most people want to see. During the same period, the price of the dollar in silver terms rose from 1.2 grams to 1.6 grams, i.e. the price of silver fell from $25.92 to $19.16, or 26.1%. However, the silver basis fell from 2.58% to 0.49%. Now let's look at the calculated monetary metals silver fundamental price. The fundamental price is well over $22. Also, notice that it's not a falling trend. It's been sideways since well back into 2021. The silver squeeze on businesses. Finally, let's look at the gold and silver lease rates. The London Bullion Market Association used to provide these until it ceased publishing due to regulatory compliance costs in 2015. Monetary Metals calculates them from public market data. Our lease rate shows the zero arbitrage point. In the real world, a bank would charge this rate, plus its internal cost of funding, plus its administrative costs, plus its desired profit margin, plus a credit spread. In other words, do not take our rate as an indication of what a real business pays. However, pay attention to the trend. First, here was gold. It's a rising trend, but this is nothing compared to silver. Silver is getting downright expensive to lease. Dollar gyrations versus metal leasing. One final word about lease rates. These are based on arbitrage in the dollar markets, and therefore the lease rate moves around based on all sorts of factors in dollar markets. Monetary Metals leases metal to businesses who need metal inventory or work in progress, such as refiners. Since we obtain the metal from investors who own it, these gyrations do not affect us.
And from Fred Hickey, today's commitment of traders report saw managed money, mostly hedge funds, net long gold futures position plummet to just 17,000 contracts, down 52% on week to lowest level since spring of 2019. May 2019, gold began a massive 60% 14-month run to record highs from 1270 to 2050 plus. In other words, you could say that the COMEX gold contract has just about run out of sellers. So here we've got a chart of real US 10-year Treasury yield versus gold. Now you may be thinking, well, that looks like gold is going to head down. However, this is a contrarian indicator, which to me says that the bottom, if it's not already in, it's very close to it. We have the commitment of traders and sentiment also overly bearish, which normally means selling is exhausted and longs have disappeared. And here is the silver graphic regarding the commitment of traders report, and you can see that between speculators and commercials. So speculation looks like it's been squeezed out of the market, and commercials are almost completely neutral. So once again, this to me is a contrarian indicator, which signals that silver's not hit a bottom. We're very close to it. And I know this is copper, but in this vital industrial commodity, the world's banks, both US and foreign, are net long, 12.4% of the total open interest in copper in the COMEX futures market as of yesterday's bank participation report. So it's the commodity trading houses such as Glencore, along with some hedge funds, that are mega net short copper. And as David Brady says, deflation in commodities to be followed by hyper stagflation, which I totally agree with. And in fact, I am now looking at gold, but more so silver and copper as the next coal. So coal, remember coal? Very much unloved, dirt cheap. I've shared on this channel how I bought coal stocks at 1.8 times earnings. I'm getting now 56% dividend yields on that. I've had some stocks go 10x, all the others 5x. But no one wanted coal. It was hated. Well, no one really wants silver at the moment. No one's wanting copper at the moment. In the retail market, that is. And so I'm going to do a video on this in the next week or two about silver, the comparisons with silver and coal in how people's psychology and that sentiment is very similar. And as a contrarian value investor, I buy things that are trading below their net asset value or their net present value, and that's what I am. I'm a contrarian. I don't price and value are two very different things. So anyway, stay tuned for that one. So in videos earlier this year or in the last few months, I've been sharing how I've been taking profits off the table. Some of even my silver stocks, some of my copper stocks, some of my gold stocks. I took some profits off the table, and it was wise that I did that. And I've shared how in recent times I've been actually starting to accumulate again and buy back in. And a lot of you have commented, "What, are you crazy? If the market's going to continue to fall, why are you buying now?" Well, once again, price and value are two very different things. So I took a lot of profits, and some of those stocks that I took profits off the table, some of them are down 50, 60, 70% from when I took those profits off the table. And so, I like coal. I'm looking at silver now. Copper soon. Copper, I want to buy copper a little bit cheaper. Not quite yet. But silver, very much like coal, in my opinion. And so I have jumped back into silver. How have I done that? Okay, so yes, I have bought some more physical silver. Not much to write home about. Pretty much just getting a little bit of silver and a little bit of gold. Just part of my collection, would you say? So wouldn't really call that my investments. But where I have, the thing I like about silver is it is a leverage play on gold as well. And so when I go into silver, I predominantly go into stocks. Yes, I've got a lot of physical silver, but I go into the stocks because that really gives me the hyper leverage on the silver price. So I've gone back in on IVR, ticker code IVR, Investigator Resources at 3.8 cents. We have a value of that. And by the way, we measure value on either a net asset value or net present value. So a net asset value is just assets minus liabilities divided by the amount of shares outstanding. And net present value is just another way of discounting future cash flows. Not everyone especially in the exploration space, has cash flow. So, and then we use that and we compare it against its competitors in the sector, and that's where we get our value from. So, we have a value on IVR at around 11 cents. So, we started buying back in at 3.8 cents. Could it go lower? Yeah, it could in the short term. We find value. So we just buy value. We don't try to time markets up and down. We're not swing traders. We're not day traders. If that's your thing, go do that. Silver mines. We've gone back into silver mines as well. Ticker code SVL. And we've gone in at 13 to 15 cents on that. We have a net asset value at around 30 cents on that one. So we find there's a bit of value there. Now, I've shared before that I own red metal. Red metal has spun off its silver deposits into Maronan Metals. Now, the guys at Crescat Capital own Maronan Metals. My personal stockbroker has a big holding in Maronan Metals, and we've bought Maronan recently at 30 cents. We have a net asset value of 90 cents there. So we're liking that. Now, another one we haven't pulled the trigger on yet is First Majestic Silver. It's now trading under $7, and that's now getting into our value range. Longer term, we see a conservative 100% move to the upside in First Majestic Silver. If silver, the underlying metal, goes to where we think it's going to go, well, that 100% is a very conservative figure, in our opinion. But we still think that there might be a little bit more fall to happen in First Majestic Silver. So, we haven't pulled the trigger on that, but we're probably going to soon. By the way, none of this is financial advice, guys. This is just what I'm doing. As I said, the stocks can fall considerably more than where they're trading at right now or where we bought. This is not financial advice. This is not a recommendation to go and follow what I do and buy these stocks. So do your own research. But they're the silver holdings that we've jumped into. We're also starting to jump into gold stocks as well, because once again, they've been beaten down more than the underlying metal. Just for example, a couple, Stavely Minerals, ticker code SVY. We've been buying back into that at 15 and 15.5 cents. We have a net asset value of that at 95 cents. Navar Minerals, NML, they're now a producer. So they acquired an asset from Evolution Mining, and so they're now bringing in revenue. They're no longer just an explorer. And we've been buying them at 4.5 cents. We have a net asset value at about 30 cents currently. So we see a lot of upside in Navar. Kalamazoo Resources, KZR. We've been buying back into that at 17 cents. We just can't believe how cheap that is. And it's now, I think it's around 24 cents. We have a net asset value of that at $1.07. And there's a whole heap of other gold producers that are off, 300% off their all-time highs. Based on our value, they're trading at over 50% discount. So we're starting to go back into those stocks. Could they fall more? Absolutely they could. But as I keep saying, price and value are two different things, and eventually value wins. So, once again, this is not financial advice. I just wanted to share with you guys what I've been doing to take advantage of, the smash down in both the silver and gold space. Copper, we think there's still room to fall in copper, and so we haven't pulled the trigger there, but we want to because we like copper longer term. We're seeing that some contrarian indicators there that might be pointing to the bottom in silver, or very close to it. We see much higher upside. The macro outlook for us still hasn't changed, and energy is a big component in where this, the macro is going to lead this decade. So for us, things haven't changed regarding our attitude towards the metals. We're still bullish in the near term, in the medium term, and the long term, out to the end of this decade. And I thought I'd share this one with you to finish off this video. For all the talk of Putin's price hike and blah blah blah, really the West have ourselves to blame. We've shot ourselves in the foot, and I've been listening to some really smart energy experts in the last couple of days. And even though the price of oil has fallen below $100 a barrel, there might be some short-term relief there. Longer term, we are playing right into Putin's hands, and at some point, he very well might turn the taps off. And in that case, these experts say that we're going to see over $300 barrels of oil, $300 oil. So what does that mean at the petrol pump? What does that mean for the economy? Well, check out a chart between CPI and oil, and you'll see the world of pain that we're in. Energy is a lifeblood of the economy. It is the most important input into the economy. And, well, I'm quite negative on where that is going because of our own stupid policies. Anyway, guys, I hope you enjoyed this video. If you did, would you please do me a favor and hit that like button? Really, really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.